Hello, and welcome back to Explain the Charts. Today is February 12th, 2025, and we're analyzing the EURUSD pair, taking into account recent news and events as well as the chart data. Recent headlines point to a mixed market sentiment. The Federal Reserve's announcement regarding interest rates has influenced the dollar's value against other currencies. Positive economic indicators from the Eurozone, however, have provided support for the euro, creating a tug-of-war effect on the EURUSD exchange rate. Let's begin with the daily chart for EURUSD. Notice the recent price action. We have observed a slight downward trend over the past week. This downward trend is in line with the market uncertainty surrounding interest rates and global economic outlooks. However, there are signs of potential support around the 1.075 level, evidenced by the recent bounce off this level. The 1.08 level may act as an immediate resistance, hindering the euro's upward momentum for now. Zooming into the 1-hour chart provides more granular insights into the recent price action. We can see that several short-term fluctuations have occurred within the 1.075 to 1.08 range. These fluctuations are likely due to the aforementioned market uncertainty and the counteracting forces of the US dollar and euro economies. The volume during these fluctuations provides additional insight into the strength and conviction behind the price movements. Note the volume spikes near support and resistance points. Now, let's take a look at the 15-minute chart for a more detailed view of this recent price action. This is where we observe shorter-term momentum and increased volatility. We can identify clear instances of support and resistance within even smaller time frames. This granular view provides additional clarity as to the nature and potential duration of the EURUSD short-term fluctuations. The volume during these short periods suggests short-term buyers and sellers may be acting on the aforementioned events. Considering the correlation between news and chart data, it's evident that the current market sentiment is somewhat uncertain. Despite positive Eurozone news, the uncertainty surrounding the Federal Reserve's actions maintains a bearish undertone. Looking at the long-term trend, we should consider the historical price data for context and consider the probability of continued price trends. However, the short-term trend is uncertain, with both bullish and bearish catalysts present. The 1.075 level serves as a significant support level. A breach below this level could signal further downward pressure in the short term. The 1.08 level may act as an immediate resistance level, limiting any substantial upside movement in the near term. In the long term, much depends on future economic releases and decisions made by the Federal Reserve. Hence, we suggest careful monitoring of the news and economic indicators. To summarize, key price levels to watch are the 1.075 support level and 1.08 resistance level. A break below 1.075 is more likely if negative economic data from Europe or further aggressive actions by the Federal Reserve occur. Conversely, a break above 1.08 is more likely if the Eurozone shows strong economic resilience and the Federal Reserve indicates a more dovish stance. If positive economic news and signs of declining inflation coincide, the likelihood of a price increase above 1.08 may become substantial. It's crucial to monitor upcoming economic news and events, including the next Federal Reserve meeting, for significant market shifts. We should also keep an eye on the volume during price movements near support and resistance levels, as that provides insight as to the likelihood of price trends. Remember that this analysis is based on the data and news available at this time, and market conditions are constantly evolving.